December the 2nd, 2025, 3:34 p.m. Tuesday, heading into the evening. A beautiful day, a beautiful rainy day indeed. Let's immediately go into the charts, and we have a naked chart where Tradingview typically starts out, and we're going to start adding indicators. But first, let's add them slowly, starting with support and resistance lines. Now, as I begin to add these, you should know what they mean. And we're on a 10-second chart looking at ZBCN because our signals are clean. We'll probably switch to another cryptocurrency so that we can talk about the Fibonacci Bollinger Bands just a little bit, the FBB, Fibonacci Bollinger Bands. But you can see that resistance is greater than support, and so you're in a trend where you can head down until support flies over, and then you have no roof over your head. Notice resistance is still greater than support, so you can go down. Always adjusting on the fly, and notice support got taken away. Going down. Now, those support and resistance lines are great. And remember, we're on a fast-moving chart because this is the training chart, right? We're usually on a time frame where things move a lot more slow. Like now we're on a 45-minute chart with CBCN, and we're not going to get bars every 10 seconds. You can see a beautiful trend here. And we can see after some time, because support was greater than resistance, the price was going up. And then we had support greater than resistance, even still, price was going up. Now resistance has come over and is greater than support. You have no floor, price can go down. All right. And even though we train fast, it's good to have time to think. It's good when you're thinking fast and quickly. You can see how now you have support and it's greater than resistance. As far as the length of it, we know that to the left of the vertical line is the present with past history. To the right of this vertical line has not occurred or is occurring or in the process of occurring. All right. So you remember the support and resistance lines. Now, let's add cadence, shall we? And the cadence we're going to add is the mouse. We know we're oscillating back and forth, blue, yellow, golden cross, death cross, blue, yellow, golden cross, death cross, the smaller triangles being an early warning system. We know that. And we know in the future we're waiting on a blue. And this blue and yellow scheme is the 1 and the 3 golden cross, blue, and death cross, yellow. They only affect the candle for the time frame that we're on. So this blue is just going to affect this candle. And this yellow will just affect this candle. And the price manipulation will keep going down until other factors come into play. And other factors, of course, are not seen right now. We just have support and resistance lines. And we have the golden cross and death cross of the 1 and the 3 really quick. That mouse can really zigzag. Now let's paint the candles to show the trend of up or down. Because remember, green is measured from the top of the body of the candle. Price was going up. Red is measured from the bottom of the body of the candle. Price was going down. It went down as low as the wick, but was brought back up and ended there, still negative overall. This one right here, the price was going up, went as high as, but was brought back down and still overall positive. Then the next few seconds came in. So there are certain ways to look at the wicks that can be logical. For example, if you think about this scenario, the body of the candle is a spaceship with fire coming out of one end. The fire is the wick. And this wick is like a booster wanting to push price up. And so typically you see the price going up until you get a booster to force price down. Typically price goes down, but that's just theoretical. Okay. You're not always going to see patterns like that. It just means the price was going up, it was going up, and people started selling, taking profit. And as they were selling, buyers were buying, and then it sort of leveled out here until the next 10 seconds came in. This is all buying and selling with the price to the right of the vertical line or horizontal line. Now, let's add the cat, the 2 and the 6. We did say the mouse has the cat chasing it. The blue and yellows have the green and reds chasing it. And we did say the blue can usher in the green, like right here, and the yellow can usher in the red. As we oscillate back and forth always between blue and yellow, and always between red and green. It looks blue, but there's a green one under it. Remember, it's not transparent like the other blues. So, red, green, red, green, red, green, red. It's holding true. Now, let's take the 1 and the 3 away, and you can clearly see the reds and greens are staggering, but it takes the mouse, the 1 and the 3, which is faster, to trigger or usher it in. The red and the green give us the color scheme of our candles when we add on the cross momentum color candles, showing us the downtrend yellow. Then we got a golden cross of the 2 and the 6, blue, but the death cross taking us out of blue is a red, right? Red, green, red. So the 2 and the 6, the red and the greens paint the candles. So this is moving down, right? All right, let's add the dog. And the dog is the 9 and the 21 right by the candle. Blue, meaning the golden cross of the 9 and the 21 wants to come in. We're yet to get a big triangle. The death cross, where is it? Right there. Then there's a golden cross right there. Large blue. Then there's a death cross of the 9 and the 21. And we've been in that death cross ever since. Let's bring in the dog pound, the 50 and the 200 coming across the bottom of the screen. We know just by looking at this, we're due for a golden cross. We like when they come in more consistently, but what triggers it? The dog triggers the dog pound. The dog pound is trying to follow the dog. And when he zigzags, the dog pound gets lost. The dog can cut corners much more quickly than the dog pound, the truck. There's a lot of equipment in the truck. This is the 50 and the 200 golden cross. All right, so we remember these as we begin to add them on. What we really want to get to today, and we love the 21 simple moving average in the midst of it, right? 21 simple moving average is moving down, so you have to be cautious. Now, we remember the 2-pole oscillator, yes, because positionally speaking, it can let us know where we are in the chart. We like when we're down here in red or green because we can cut up through the higher portions. The neutral line is in the middle. And from the middle, you can either go up or down. So we like when we're down here because this is a good entry point with some value, some cash, some acquiring of this particular ZBCN token, and the price goes up. Okay? You do have pivots of ups and downs in here. Now, this is exaggerated, but it's good to see that value coming in and out. Let's auto adjust the bars. Now, pi. I got to introduce you to pi before I start adding the other things that you're aware of. Let's show the markets heating up and cooling down. And we can see that visually speaking. And I like to see this one, the buys and the sells. Let's move it over slightly. Right clicked it. Here it is. All right, so on the 10-second chart, this information isn't coming in, but on the 45-second chart, we get to see who's buying and selling. That information is not feeding through with ZBCN for some reason. Let's go on a 2-hour chart. Maybe it is, maybe it isn't. So the feeds aren't always coming in. It's good to see who's buying or selling. Like if the price is going down, you'll find in many cases when it's about to turn around, people start buying like crazy and the buying number is higher than the selling number. Someone's usually caught on the wrong side of the trade. Okay. We can see why this is moving down because the 50 and the 200 death cross has been wanting to come in and then it comes in. The 21 simple moving average land a few candles on it and finally it's an uptrend, but it may be permanent or temporary. Right? It may last a while or it may just jump right back down. All right. Now, pi. Notice this down here. We got the pi for the 1 second, 5 second, 10 second, 15 second, and 30 second chart. But before we really introduce this, let's talk about major pi. I'm going to save this chart layout. We're going to go from under the microscope to the freestyle view. And when we look at this view, and we'll come back to the 10-second chart, we want to show you how important pi is. Let's go to a 1-month chart. Drag this over. I'm going to take away the pi for the 12-hour time frame, for the 2-week time frame, and I'm going to leave the one for the 2-hour to 3-month time frame on there because you see something special here. In the gap is an area of interest. Before there was major movement to the upside, there's the pi cycle top indicator flagging, hey, something is going on that your eyes may not see. And for the major time frames, like the 1 month, the 2 month, the 3-month time frame, in fact, let's scale out to a 2-month time frame and compress time. Because sometimes it's just good to see the big picture. Now every bar is 2 months. Notice pi. And notice you're looking at from 2017 and 18. Green for this one means the price has not been low like this in a while. Yeah, you're coming off of some major highs. Look at the wick. A lot can happen in 2 months. So green is usually low, and you usually accelerate out of green. Green is low. So these gaps are areas of interest. You want to accumulate in the gap because when you see the shade of red and orange, the price is going up. And so if you look at each corner, you start to see just before you get in and things really explode, you start to see pi shade in. Bam. Now, ZBCN 2017, 2018, let's do a measurement. Because we would have got in here. We would have noticed the moving averages moving up. And let's just say here, and let's just move up a little bit. You see the percentage? Do you see that? That's 1,326%. Just from there to there. You know the value of pi. Pi is something you want to pay attention to, especially when you're on higher time frames. More recently, 2024, November. We're here. It's starting to move up. You're starting to see the line get closer to its line of excitement. So you put value in the gap, value in the green, value in the black, value in the gap before Pi comes in. When it comes in, you have some action. That's how Pi works. So we're just going to measure the most recent one. Value in the gap, bottom of the red. And let's just go to the tippy top of the wick. 184 days, 5x, or 511%. You put 5,000 in, 10,000 in, just multiply it by 5. We love Pi. Back to the 1 month chart. Now things are spread out. You can still see before the shade comes in, you're in at a good point. Pi cycle top. Now, that's a long time to wait. But you understand the value of Pi. So let's go with our beautiful under the microscope view and go back to the chart. Let's cancel that. And we'll leave it anyway. All right, we're getting some rain outside. Hopefully I'm not competing with too much background noise. I want to show you the beauty of Pi because overall, you want good logic of jumping in and exiting trades. And the Pi cycle top for the various time frames can assist you greatly. I mean, greatly, combined with all the other indicators of which we still have yet to add. All right, pay attention to here. And we're on the 10-second chart. Let ZBCN pick up on cadence and let's initiate Pi. Green, the price hasn't been this low in a while. Black, get in, put value down. Because when you go into the shade of orange, you can see some increase. And you can see how true that is. Green, get in, ride it into some shades of orange. Now it's a fast moving chart, but Pi is working on the 10-second time frame. You can understand if you wanted to accumulate at the lowest price, you get in on the green, the darker green, or the black, and you can stack and stack and be accumulating at the cheapest prices overall. It's going to give you good entry points, especially when the 21 simple moving average is moving down, symbolizing a bear market. Hard to take a trade when the 21 simple moving average is moving down, but that's picking out really good gaps for you, riding you into some interest gains. You can see the action of the candle. This is a beautiful visual. Here, and the 21 simple moving average is moving down. Do you know how hard it is to take a trade when this 21 simple moving average is moving down or in a bear market? Open this up so you can see Pi in action. The lime could be an introduction to get out, or it can be a bridge. Hey, you know, the price probably isn't going to go down. Count cadence, see what you got. Okay, after yellow comes blue. That may be worthy to stay in if you know what's going on. But if the yellow and the red remain and you don't get something right after it, then of course you get the green or the black. Green is low, right? And you accelerate out of green usually until you hit the shade of orange, which means you can peak out. Okay, so you understand how the Pi cycle tops work for the various time frame. They're giving you really good entry points and sometimes good exit points before the price starts to really dip on you. You got the markets heating up and cooling down, right? You can see that right there. Don't get as hot as that. So that can help you out and assist with pi. You got so many other things you can look at in the chart as far as counting cadence, looking at the money flowing in or out with the 2-pole oscillator. We got to put the wind channels on so you can see where you are. Oh, look, you're cutting up through red and something's not totally added. Let's make sure we got the 9 and the 21 and the 13 and the 48. Nine and 21, are you there? 13 and 48, okay, there it is. 50 and the 200, yes, everything is there. And now we're going to put on the WMA, weighted moving average wind channels. Let's see if we can shrink this down just a little bit. Oh, it's too small. Let's just move the 2-pole oscillator out of the way. Let's minimize that. Okay, let's put on the WMA, weighted moving average wind channels. And pi is something that's beautiful. You saw it on higher time frames. Now we have it working for the various time frames here, which is beautiful. Let's add the major indicators back on there. All the ones we talked about. And now you can understand pi, a beautiful thing. Okay. We're so compressed here, so I have to take the WMA off. That way we can see our candles. Yes, definitely yellow, out of the trend is telling you when things turning around. So is the background of your chart. And that's a great entry point. Bottom of the red, top. Doesn't get no hotter than that. That may be your exit. But your count cadence and see what's next. And you know you can still go up a little higher. Because before this channel closes, you will be above it. Now keep in mind, everything usually merges and it looks like we're riding relatively flat here as that 21 simple moving average is slowly pulling up. This could be a good entry point because before it closes, you'll be above it. All right. So your pi is talking to you. The pi is like a cheat code. It has 4 very special moving averages in there. And it's seeing things you don't usually see. It's bringing things to your attention. You know what? This is probably the bottom. This and this probably the bottom. Especially when that 21 simple moving average is moving down. Like this is hard to take trades up in here when the 21 simple moving average is moving down. But even in the bear market, pi can flag you some really nice trades. It's really, really nice. Now, let's go on higher time frames and let's open these up. So 1 minute. I'm going to close that one. Let's go to the 3-minute time frame. And I love it when I'm working with 2 pies together. All right, let's go to the 3-minute time frame. Because you can see the pie for the various time frames here. I'm looking at the last number, 11 minutes, 45 minutes, 2 hours, 6 hours. Okay, I'm looking at the last number for the pi cycle top. This is a beautiful thing. Now, this one is only good for up to a minute, so I'm going to get rid of that one, and I'm going to put the 3 to 11 minute one on here too. You got 2 riding on top of each other now. Okay, so now you're watching the vertical line, and now we're here. And we can see 1 pi kicked off. Almost. It's a good entry point, right? And then you're here, you start to accelerate. And here. And here. And here. You're in orange. And then you see the cadence across the top, yellow. It's about to usher in the red. And the markets begin to cool down. Good entry points. All right. Makes sense, right? Definitely makes sense. Hey, this is symbolizing the bear market. 21 simple moving average is moving down sharply. There may not be any worthy trades in there to take. too much is going on, even though the two-pole oscillator says value is flowing in slightly, but it may not be worthy to take the trade. Sooner or later, it'll turn around. And you can see if you start landing candles on the white and above the white to flatten that out. One thing you also know with the wind channels, before this yellow channel closes, you will be above it, right? All right. Market's heating up in the background for the last 6 minutes, right? That's interesting. Green is usually a good entry point. All right, but that pie is working on a 3-minute chart. Let's go to a 45-minute chart where we have the 45-minute pie. Let's open that up. And let's close the ones irrelevant. Look at that 45-minute pie right there. Look at this. Green, great entry point. It touches its line of excitement. Bam. Look at that. You got a visual. You have something to boost your confidence now regarding everything else in the chart. And plus, you can see yourself cutting up through the negative, up through red. All right, you see a number of things going in there. Before this blue channel closes, you'll be beneath it. Down through the positive, up through the negative, down through the positive. Now you understand why the candles are moving up and down based on weighted moving averages, simple moving averages, pi, the hybrid relative strength index, and stochastic relative strength index. One is the strength of the market. The other one is the speed of the market. You're beginning to put everything together now, and this makes you confident. Now, when you take a trade, everybody's going to be a little nervous. Everybody gets a little nervous every now and then. But on higher time frames, when you start to see pi open up on larger time frames where the percentage can be significant, let's just measure this. And the gap is where we put value in. Oh, beautiful. 10.37%. Well, what if $10,000 was in there? And that's $1,037. And if $5,000 was in the trade, then you got what? 517 or so dollars, ballpark. Beautiful. This is beautiful stuff. All right. Now, pi means buy. It's based on the circumference of a circle, 3.14, and the price continues 589, and the numbers never repeat. So the circumference of pricing is giving you a floor and a ceiling for the time frame that you're on. So theoretically, if someone's got no money, then they can always use pi to accumulate interest and bring it to the next higher time frame, till eventually you get on the 1 and 2 month chart and you have a handful of interest or change in your hand in the gap, and then things explode. All right, that's going to be better explained on the 12-hour chart and so forth, but you understand pi. Green and red, dark green and red, is the area of interest. If you don't put value down, you can't enjoy the gains. Now, we can't predict how high this thing is going to go or how short. You may just get one orange bar. But why do you think you're getting one orange bar? Because the 21 simple moving average is on a decline. So we like when things round out if they're flat. And we definitely like when things are going up on the 21 simple moving average, the white line in the midst of the yellow and the blue. Okay, when you start putting everything together, especially pi is a definite confidence booster. All right, so we like what we see here. Cut them all on, go to the 10-second chart. Then we're going to be looking at the higher time frames, so you can see how beautiful the 1-day chart is, the 2-day, the 4-day, the 1 week, the 2 week, the 1 month chart. You see some beautiful things in these assets. Look at Pi on the 3-second chart. Pi would have had you in the trade because you would have got in the black or in the green. Pi would have flagged it. You most likely would not have missed it. That golden cross wants to come in. So and notice before the death cross of the 50 and the 200 closes out in the midst of the black borders, before it crosses, you're above it. Sure enough, you're above it. Let's put on the weighted moving average of the 111 and the 700 because we might see the dotted white lines coming together. Let's let it load. It's loading. Okay, so you still have room to cut up through red. Then you're going to go up and down, but you still cut up through red slowly. And look where you are with the 200 and the 400. You're in that special area of interest. The dotted green lines, 200 and 400, a decision has to be made. Either you're going up or down with, if you consolidate, usually with the quickness. It could be explosive when you're in that zone. All right. So we can see Pi for the various time frame that we're on. And Pi, you see it fading out just a little bit there. Orange, light orange. And then we're in black. We're out of there. You can count cadence too. But sometimes you don't always exit right there. Because look, the red came in right here. And we were still in Pi. Value was still coming in. Markets were still heating up. And the blue or the green immediately came in. Look how hot we are up here. Then we start to cool down. And even though we start to cool down, it doesn't mean the price had to drop right away. It's like giving you time, especially when you're on higher time frames. It's a beautiful thing when you get in low, and Pi is there to help you out. So hopefully you understand the Pi cycle top indicator for the various time frames that you're on. I think we have most of everything cut on. We don't get the Fibonacci Bollinger Bands for ZBCN, but let's add the risk adjusted momentum oscillator now. Okay, we can see the risk adjusted momentum oscillator currently above its line of excitement. And Pi got you in again. Just imagine, not on the 10-second chart, but on a time frame where the percentage is significant. If you're pulling out at least 3 good trades within a 5-day period, that can be a beautiful thing. So sometimes people, they don't understand compounding interest. I always say the mortgage company understands it. The credit card companies understand compounded interest. The banks understand compounded interest. You file bankruptcy and here come that new application for you to file for their credit card in the mail. Everybody wants to extend credit most of the time if they think they're going to get their money back because compounded interest is insane. If you take $100 and you're gaining 15% every 10 days, tell me how much you have in a year. That is the beauty of compounded interest. All right, you need to see it on paper so you can understand. With a little bit of education, you can take something really small and begin to magnify it. And even though this trade right here for the higher time frame, say nothing's going on, the market may be overall going down on a larger scale, we know there's trades to be made. So we see the same thing on the higher time frames. Let's go there now. Save. We're going to go to the higher time frame and we're going to use bonk instead. That way we can get our Fibonacci Bollinger Bands showing up. Bonk. Beautiful cryptocurrency. Bonk. All right, let this load all of the beautiful indicators here. It actually says XRP. That's fine. If it doesn't flip to bonk, we'll stay on XRP. 12-hour chart, 12-hour Pi cycle top in action. Look at the beautiful entries. Look at this right here. You see that moving average right there? You see it moving towards this line of excitement for the 12-hour pi cycle top? And you see the background is green? The 21 simple moving average is down. You have to be careful with that because you can still get in and go down. So let's measure, shall we? 12, 24, 36, 48, 1, 2, 3, 4, about 4.5 to 5 days. When we measure, bottom of the red, top of the green, and even there's a wick there. There's a wick right there. 19%. 3 days. Well, hang on. What did I say? If you can get 10%, 15% every 10 days, that's a beautiful thing. And I just picked a random spot here and measured it out. And XRP is great to hold and stack. Bonk is a far more worthy mover in most cases. But remember, with XRP, we can get into the 11% if we're in 2x leverage. The tricks of the trade, right? The tricks of the trade. The 2x leverage, again, ETFs, XXRP, and XRPT. So let's compare the price. This went up about 7% overall today so far. And 7 times 2 is 14. Well, look at there. But you use this XRP chart to determine when is a good time to get in with XRPT or XXRP. Now, when the market closed at 4, I don't like to be in. So I like my action between 9:30 and 4 o'clock. I don't like to hold these assets overnight. That's just me. I think that's wisdom. All right. That's on the 12-hour chart, right? You count cadence, everything's slow. You see the markets heating up for the last 12, 24 hours. Yeah. Because the golden cross, the mouse, 1 and the 3, ushered in or triggered the 2 and the 6 golden cross that painted the candles from yellow to blue, indicating an upward trajectory. Now we know that after blue comes yellow. A yellow will be due somewhere in the future. And the yellow could potentially trigger in the red. Maybe, maybe not. We'll see. We got to take things as they come. But some people probably enjoyed the little ride from here to here. Right? Because you're watching the moving average. Some people would have got in here. They probably would have dollar cost average. $10 here, $20 here. Until it's time to go up. We know we can cut up through red. But we have oscillations of going up through red. It's not always one shot straight up. And then next thing you know, XRP is sitting at $2.63 here. Usually you have to be patient with the markets because there are some ups and downs and ups and downs, ups and downs. But we love pi. Let's go to a 1-day chart. Now we're going to get rid of the 12-hour pi because it may just give you a solid line. It just depends. And it's giving you a solid red. Let's just get rid of the 12-hour pi. Let's look at the 1-day chart. Beautiful. Now, areas of interest. If I'm trying to pick the bottom, I'm trying to get in while things are low. Look at the 2-pole oscillator. Positionally, that can tell you where you are. If I could open it up, I'd be all right. I know a lot of calculations are going on right now. You can see value flowing out, but it may be time for value to flow in. You can see the buys and the sells. The sellers outweigh the buyers. And for some reason or another, someone can get caught on the wrong side of the trade. So what's happening? They are your exit liquidity. They don't know what's going on or how to read charts. They don't know that we're cutting up through the negative and down through the positive, right? So it just depends. Our zone of interest with the 200 and the 400 is all the way up here. All right, we got a lot going on, but pi is beautiful. Let's go to bonk. Bonk. 10.7 something percent overall today. That's beautiful. I made a nice healthy percentage today. I made about 8.5% today, which is great. Something. wonderful is happening. All right. Bonk. The 21 simple moving average moving down for a number of days. Here, it's moving up. Let's just measure from here to here. Bottom of the red, top of the blue. 3 days, 17%. Beautiful. Let's measure another one. Lime is a bridge. You either count cadence, get in or out. All right. Here, we're out of the trade. We're trying to see how far things are coming down. We're trying to catch a reversal. Green. And other things are talking to you in the markets too. After yellow comes blue. And that's green. You probably jump in right there. Pie. Green is the lowest. Red is higher. Orange is the highest. Let's just measure from here to here. And keep in mind, this is with the 21 simple moving average moving down, which is hard to do in many cases because people lose their patience. All right. They don't know when to get in and when to get out, but Pi is helping you out. 16.9%. Beautiful. 10,000 in the trade, $1,690 out. And you get to keep your 10,000. And you're going to pay a little small fee for the trade to buy and sell, but hey, it's all good. The higher time frames are great. Now, what if you were on a higher chart or looking at things microscopically? No action going on right here because we're looking at this like microscopically, but you do have some trades in there. Now, the 2-day chart. The 1-day chart may become obsolete. We'll probably get rid of that, or either it won't show up at all. Now we have, all right, so the 1-day chart is not showing. Look at the 2-day chart. All right, that's some beautiful stuff. This has you timing when you're going to get paid and your dollar cost averaging, because when you move, I mean, before this channel right here closes, you will be above it. We start landing candles in the yellow and on that white line, it'll flatten out. It'll turn around. That's beautiful. That's beautiful to look at right there. But people don't like to plan. They don't understand where they are in the chart. They're listening to the news and they're not understanding support and resistance. All right, do you see the blue line? I see it right here. When I highlight it, we see that it ends right about here. Your support is greater than your resistance. How can it be? You're moving down. So the chart, either resistance is going to fly over and be longer than support, or you're about to cut to the upside. You're not going to come forever. So again, as we begin to land candles in the yellow and on the white, before that channel closes, you will be above it. Then you got your 13, then your 48 before this red channel closes with the orange circles as the border. You will be above it. And before your 50 and 200 dot cross closes, you will be above it. And if you're ever in the midst of, it's only one line, the 200, then it's just going to be the 200. I don't see the 400 counterpart. If you're ever in the midst of the 200 and the 400, a decision has to be made. Something explosive can happen. All right, so it depends on how much history you have in the chart. Bonk hasn't been around too long. Press time. Yeah, you only see one line, so that's the fast-moving 111 line. They don't have the 700. All right, so back to XRP. Back to our beautiful XRP. But with Bonk, you can see those moves, and that's with the 21 simple moving average going down. What happens when everything starts to really open up and that 21 simple moving average in the midst of the yellow starts to flatten out and go upward? It's going to be a field day. All right, back with XRP. And I'm aware of the time. All right, let's let everything load. And we're just going to pan through the time frame with XRP. And I just want you to gauge pi along with everything else in the chart. I'm going to remove the risk adjusted momentum oscillator. And we'll just talk about Fibonacci Bollinger Band some other day if we don't get to it. Or we'll put it on the 10-second chart so you can understand what's happening with XRP with the Fibonacci Bollinger Bands. All right, are we auto-adjusted? We are auto-adjusted. We see where we are. Green, a sea of green. We travel down through green. You're in a zone or area of where a decision has to be made. You're in the midst of the 200 and 400, the green dotted lines. You're in there. Will you flip to the bottom side really fast? Strong possibility with all this green behind you. And if that happens, it's discount time. I'm grabbing as much as I can on a discount because I know things eventually turn around. But some people can't plan that far out ahead, but that's okay. Let's go to the 4-day chart. And we don't really have one for a 4-day chart. So let's just look at things because sometimes pi helps you out too. All right. And notice the big one we were looking at earlier. Remember when we was on the 1-month chart and the 2-month chart? Remember this right here on the 1-month chart and the 2-month chart? You remember that. Now look at the pies overlapping it and on top of it. You got trades within the major trade. You got trades within trades, which is really nice. Really good entry and exit points. I love the fragmentation grenade. This is version 1 and version 2. So when we start hitting the top of markets on so many moving averages that I can't put every wind channel in here. So when the grenade goes off, when you start seeing these little clusters go off, then you can very well be at the top of some of the markets when it happens over here. Because the 21 simple moving average is here. And now it's here. So if you're leaping this high when the 21 simple moving average is that low, what happens when the grenades start going off and you're here and you start leaping that high? You're at a higher price point altogether. So the fragmentation grenades, when they start going off, I know we're hitting the top of many of the markets, especially this one right here. Look at that. So when we're in a cluster and sometimes things start to spread out, then I'll be like, okay, it could be showtime. All right. Now, the 1-week chart. And notice your pi cycle top for the 1-week chart is a beautiful thing, overlaid with the 2-week chart, overlaid with the major chart. We got perfect entry and exit signals. You got perfect times to get in just before the action happens. Even though the major one was giving you a general idea, these are giving you more specific ideas. And now, the reason why these are so compressed here is because you got the big spikes on here. They're opened up. If we move those off screen, then these begin to open up. So watch as I slowly move them off screen. Then everything in here begins to open up. See it starting to open up? All right, now it's opened up. Now you can understand you have trades within trades. Even in a bear market, when things seem dull over time, you can still compound interest. You don't have to be in a bull market or the bear market. Those things don't really matter. But we know we're about to hit an alternative cryptocurrency bull run because what the major larger pie is telling us. And you still have these here. All right. So the 1-week time frame, people like to hang out there. You see where you are on the 1-week time frame. You're at a good point. You're below the median line. You're below it, which means you have room to move up. But we have to respect the chart. You know, you typically travel down through positive. But before this channel closes out, right? It's the dog following the cat. Before this yellow channel closes out, you will be above it. So it's not to say we're going to travel down through this green and we're going to be sitting here. You don't read it that way. You look at everything and you always give the chart time to develop. I know that can be a lot of information at one time, but when in doubt, trust pi. Pi on the 1 week chart is going to give you good entries and decent exits as long as you don't get greedy. You can count cadence and you know what's coming next. After the blue, if it doesn't bring in the green, we can get a yellow into the future. And you can always bust this one candle down infinitely. You can break this one candle into 7 pieces by looking at the 1 day chart, etc., etc. You can break that candle down almost infinitely. We see the market's heating up here for the last 1, 2, 3 weeks. The markets are heating up. Things are starting to turn around. On the 1 week chart, things are starting to turn around. We're feeling it. We're seeing it. We're seeing it in the chart. I'm seeing it in the percentage that I gained today, which is really nice. All right, what else? Pi, 2 week chart. Now the 1 week pi is going to disappear and you have the 2 week over the main one. All right, and as you start looking at the 2 week chart, then you say, okay, there's some opportunities that are in here that are just not worth ignoring. I mean, this is a small move here, right? But let's measure from within the green to in the orange. And then you see the market cool down. Let's measure it. That's a wick there. Most likely you'll catch it low if you really want to get in. So that's the bottom there. Let's just go in the middle. Bottom of the red, top. The wick got as high as, look at that, 47 days, 35%. What if 10,000 was in the trade? What if 5,000? What if 1,000? What if 500? So the higher on the time frame, the bigger the moves, the cleaner the chart. But you want to be confident about what you're doing. And the pi cycle top, used correctly, is there to help you. Counting cadence. Everything matters now. We're not here to lose. And we know sooner or later this thing will turn around. So this is a long downtrend. And we got a blue that could potentially trigger the green. And we got support, strangely, is greater than resistance. So this is a beautiful setup. And of course, the 1 month chart is what it is. That's pi. Wanted to take the time to introduce pi. Now, before we exit out of here, that's the 1 month chart right there, right? Beautiful, beautiful entries. Even though it doesn't have to turn orange, it's still letting you know, hey, something interesting is going on here. Some value is going on. And let's double back to the 10-second chart. And because the candles are so thin in most places, let's take away the larger wind channel so everything pops up for us. Yeah, it's just so massive on the golden cross of the 50 and the 200. This is huge. Let's add the Heikin-Ashi candle so we can see the body of the candles. And so we can see the body of the candle show up instead of just little dashes. And every 10 seconds, we should just about get a bar. Okay, let's cut on pi, cycle top for the 10-second time frame. Oops, you know what? We're not under the microscope. Shame on me. Let's leave from here and go under the microscope. Save that. Under the microscope. Different layouts, right? Different layouts for different positions you want to see. Now we're closer. Okay? We're playing it close. We're playing it anywhere from 10 seconds to 6 hours close. 10 seconds to 6 hours close. The other chart, 12 hours, 1 day, 2 days, 1 week, 2 week, and then the 3 month. All right, risk adjusted momentum oscillator. Let's remove that. You can see the pi cycle top. We're just looking at the top one really for good entry and exit signals, even though it happens over time, but you can still see what's going on. We're going to travel down through the positive, that's for sure. Before that channel closes out, you can see it happening in real time. We can see the death cross of the 1 and the 3, yellow, ushered in the death cross of the 2 and the 6. The red is underneath the yellow. We can see the market's cooling down. We know that after yellow comes blue. We know that after blue comes yellow. And we know that after yellow comes blue, and we're looking for a blue to trigger in the green to take us out of the negative downtrend and change us from yellow to blue. Can blue bring in the green? All right, we can see the 111 and the 700 is coming to a close. Before the dotted white lines come to a close, before it flips, you will be above it. All right, and so many other things in the chart. That's pi for you. Pi is visually stunning. Pi, along with other things in the chart, with so many other beautiful indicators that you're using, lets you know when to get in and out. Now, Fibonacci Bollinger Bands. When is something about to break out? We come to a pinch. So I just clicked on the Fibonacci Bollinger Bands. Let's see if it even loads. CBCN? No, we want XRP. We don't get those signals with that. So we want XRP or Bonk. Which one's really going to move? Bonk. Bonk has really good body size candles. All right, so Fibonacci Bollinger Bands, when everything loads, Heiken Ashi candles. Look at the Fibonacci Bollinger Bands. Let's put the Heiken Ashi candles on so that we can see more body of the candles. We want to take the larger wind channel off, right? Even though we can see a golden cross came in on the 10-second chart. That's nice. That's nice. We love the golden cross. All right, take that away. That can linger and trigger over to the 1 minute chart, can linger over and trigger to the 2 minute chart, possibly the 3 minute chart. And that right there could be a good percentage. What I love about crypto is the markets don't have to be open. Crypto is 24/7. All right, Fibonacci Bollinger Bands. Notice it's open here and it's starting to get tight. When it begins to get tight, you're either going to open to the downside or the upside. So you count cadence and you look at what you're due for. Let's see if there's anywhere else where it may have gotten tight before it broke out. All right, so it's relatively the same size here. Let's go to 45-minute chart. We're just looking at the Fibonacci Bollinger Bands. Notice it's tight right here. And then when it opens up, it's like pressure building up. And then, unfortunately, here it fell to the downside. And we probably knew it was going to go down. All right. And, of course, pi, right? We're not looking at these first three because we're looking at the one for the 45-minute chart. But the Fibonacci Bollinger Band here, it gets tight. And then it releases a little bit. And you can bounce up and then down. Or you can have a fake out, so to speak. So it's like a bullet traveling through, like a ping pong, traveling through a tunnel. So if you look at it, we're flying. As it gets tighter, it moves back and forth more quickly, building up speed and momentum. And then, based on the last wall that bounced off, boom. Now, what do we say? Red, you don't want to really be buying up here. This is when you see stuff on the news, on TV. Jim Cramer comes on MSNBC. It's going through the roof. It's on fire. Then the sucker starts to get in, and the big guys, the smart guys, start to exit. That's why the price just doesn't drop, right? So if you look at Fibonacci Bollinger Bands and you see you touching green, then that can be a great time to start buying, especially if you notice you're lifting off of one darker green to lighter green. You're moving up. Even though the price could be looking flat, more value is coming. A breakout is about to happen. This is going to come to a slight pinch again. You can see the two are meeting at a certain point. But notice the pinch here. When things are flat, put on the Fibonacci Bollinger Bands and start paying attention, especially if you're in the midst of the 200 and 400 dotted green lines. All right, so you're not in the dotted green lines here, but it's nice that you're traveling up through red overall. All right, Fibonacci Bollinger Bands. When things come to a pinch, something is going to break to the upside or the downside. With that said and done, you have to understand, I'm not a financial advisor, but if you understand all this information in the chart, you can look at the chart. Your mind will ask yourself a question. Well, why did it go up here? Why did it go down? The history is there. You learn by looking at history. The past proves the future. And with these higher time frames, teenagers, kids, they will plan their future. Because you can take something of minuscule value and you could be getting big gains and percentages on it. You know what? I'm going to put this $1,500 or this $2,000 aside, and I'm just going to dollar cost average or accumulate while we're going down. And I think when we come to the end of the markets, I'm going to put more value down, because sooner or later, I know there's going to be, after red will come green, but after yellow will blue. Blue will take me there most likely. So we'll count cadence and we'll see what we have. This, to me, it's God's promise to me. The 30, the 60, and the 100-fold shall men pour into your bosom, but you got to enlarge your tent. So this is me enlarging my tent using some beautiful indicators that increase your confidence in your IQ and your knowledge of trading. But the disclaimer. Let's let our beautiful outro take us on out.
Your instructor of this extraordinary chart layout and information expounded upon is not a financial advisor, and nothing in this presentation is financial advice. Cryptocurrencies, ETFs, ETNs, stocks, bonds, commodities, you name it, these things can be highly volatile. You could lose all of the money you invest. You should always do your own research and consult a qualified, licensed professional. Your investments are your sole responsibility, and you should know that nothing is ever guaranteed when it comes to investing or trading. You know, an explosion can go off somewhere, a train can derail, a bank could collapse, or there could be a break in the financial system. There could be a temporary liquidity freeze. Also, somewhere in the world, war can break out in another country as we see Russia sparring with Poland. A volcano can pop its cap. A political scandal can appear out of seemingly nowhere. The Fed may not lower interest rates when expected. ETFs may or may not get approved when expected. The spread of an illness can place countries on lockdown, as the world experienced this just a few years ago, and these are just a few examples that could set off markets to rapidly flip one way or another, unexpectedly and unpredictably, so nothing is a guarantee. Your captain, nor the platforms containing this presentation for your review are liable for any losses. This video is strictly for entertainment and leaning heavily towards the educational side only. Stay objective and stay informed. Always follow the money indicated in the chart inflows many times before key events in the social, economic, and political climate forms its narrative in the news. Take the time to like, share, comment, and subscribe if you enjoyed today's content.